had the great pleasure of interviewing Steve Mendelson. Steve is currently with HSBC Mortgage in the upper state of New York. Before we discuss your professional career, your contemporaries always want to know a little bit about your background.
Sure.
Whatever you'd like to tell our audience, please end up this portion with just how you came to enter into the business.
Okay.
Everybody seems to have a unique story.
Actually,
Did you grow up, for example, in the Buffalo, Syracuse area?
correct. I grew up actually in the Rochester area, Pittsford, New York, a suburb of Rochester. Went to school there.
Where'd you go to school?
Went to school at Pittsford Sutherland and then on to St. John Fisher. And
Is that Jesuit school?
yes, believe it or not.
Oh, okay. Well, I went to Georgetown. The Jesuits got me too.
Yes, and from finishing there, I ended up in mortgage banking, quite honestly. I worked for household finance for a brief stint after graduating, but after that I started at Fleet Mortgage in Rochester, New York. And Fleet was a big player at the time. And
so you went right into...
I went right into the mortgage banking.
It's a little bit unusual.
Yes, it was, and I knew right away I liked it. I liked dealing with people. I liked the scheduling, and obviously the possibility of working for myself, basically being independent. And that's really one place in the bank where your income is unlimited. And so I enjoyed again, writing mortgages and again, learning the business, not just writing mortgages, but always learning the business from processing, from secondary markets to underwriting guidelines and so forth. So I've always had a thirst for that, so I ended up staying in the business. And at this today, I am almost going on my 8th year anniversary. Actually, April 4th, I believe, will be my 8 years with Marine Midland, otherwise known as HSBC.
Well, let me just ask you, what kind of volume did you do in 99 as best you can estimate, and what about 98?
99, I made Mom's top 200 list. I originated, I believe, 42 million, closing somewhere in the 30-some-odd range. I have a plaque downstairs that tells me the exact numbers, but
that's right.
99 was obviously a great year for anyone that was in the mortgage industry, but it was one of my better years.
And what about 98?
Acknowledged as such, so again...
98, you made the list too, I think.
Correct. Yeah. 99 started out just as it was a terrific year, and it just continued. Normally December, January are your down times in this business for whatever reason, whether it's holidays, weather, of course, obviously,
sure.
a big part of that in Buffalo, New York, but that wasn't the case in 1999. 1999 just steamrolled, and the volume was obviously tremendous, and all goals were made, if not blown away. So,
well, if we could, I'd like to kind of get into when you first started, not necessarily with was it HFC, Household Finance, other than the fact that I find that interesting, and the reason I find it interesting, I think our listeners will too, is that a lot of the really great sales training that goes on in some peripheral industries, and for example, things like car sales and selling insurance direct, and some of the best salespeople in real estate, sold pots and pans. Greatest salesman ever knew.
To the HFC days, that was a good foundation for me. It gave me the opportunity to get familiar with home equities at the time. And
exactly.
That's what their push was home equities. We really weren't a first mortgage player. So it gave me the background as far as home equities and
I think it's
personal lines of credit.
Yeah, I think it's also a little bit of a harder edge business, and because of that, it's a little harder to close. I think you got to work, you got to really hustle.
Absolutely.
And you don't make as much money. So my take on this, for whatever it's worth, is that it's a real good training ground for people who want to get into the business.
Absolutely. Any financial industry, even as you had indicated, car sales or any sales business. But if you have the financial background, it does help. I can say when I made the move, I was familiar with some of the terminology that was being used in the mortgage banking industry. I was familiar with, just basic terminology such as loan to value and simple guidelines. So it gave me that little edge when I came and interviewed at Fleet at the time. So I'd agree with that. Also, it was harder because obviously you were dealing with subprime lending in a lot of cases, and higher interest rates, and you had an applicant that may have had credit issues, for that matter, several credit issues that had to be resolved. So we were not only putting the packages together, but we were financial counselors, if you will, on how to resolve credit issues and helping make a loan. So it started early. It started at a young age for me, and it continued to take me to where I am today.
Well, let's talk about Fleet a little bit. I don't know how long you worked for them, but I'm more interested in those initial stages of being in the purchase money first market, because and every story is going to be different here. Many of these stories are really a baptism by fire, where literally you almost die and you don't make any money in your first 4 or 5 months. It can be a real tough entree into our business. And yet I talked to somebody yesterday who's doing an interview who had a very easy transition. So what was yours like?
I was fortunate enough to have, I think, a somewhat of an easy transition. When I got into the business, we were going through a refi wave at the time. Mm-hmm. So there wasn't really any formal training.
Lucky indeed.
If anyone is in the business, they know your training is, grab a Fannie Mae guideline book, go into an office and close it and start reading. That has changed. The business has evolved. We have now training. Actually, I participate in some of those training classes as helping, younger LOs get into the business. So we've come a long way in that area. But I was fortunate enough, again, when I got into the business where we were into a refi wave, and I was familiar with a 1003 because I did some homework. And when I started, I knew I had to start to write business immediately if I was going to survive in the business. And again, I had the refis coming in, and at the same time, I knew I had to develop a core of business that was going to take me through past when the refi stopped. Mm-hmm. That was my concentration. That was my focus. So, networking is all a vital part of that, and developing.
How did you? Because this part of the discussion will be of great interest to people who were new loan officers in the business, who were scared to death for one reason or another and wondering what the hell's going on. Mm-hmm. What did you do in those first 3 to 4 months to launch yourself? Specifically,
my first 3-4 months in the business. I had somewhat of a pipeline to work with, so I was fortunate. So I was able to get outside and market myself. What I did, the first thing I needed to do was look at where my business was going to come from. You sit down and you analyze where your business is going to come from. I knew realtors were going to make up at least 50 to 60% of that business. I was fortunate to know several people in the real estate industry. So that was my first plan of attack. I went to real estate offices, and that's one of the hardest things to do when you're new. You have to sell yourself. But you have to remember that it's very important when you pull into that real estate office to be prepared and to be truthful. The biggest mistake I think young LOs make is they guarantee too many things up front, or they make promises they can't deliver on. And ultimately, your reputation is hurt by that. So you have to remember to stay focused and to promise what you can deliver. That's very important.
I rarely in my interviews ever interject with a personal experience of my own, but I find your comment compelling, and the reason I find it compelling is that I know this to be true, and I'd like to interject with a little story of my own, which I say is very rare for me. And that story is that I'm 56 now, but many years ago when I was a young loan officer, I was very good. I'd been fortunate because I'd been the top realtor in Long & Foster, which is today the second largest real estate company in the country. And because of that, I had a really smooth transition, which, again, was rare. I had a clientele built in. But one of my offices was the McLean, Virginia office. They were big-time producers, and the biggest producer of all was a woman who I can't pull her name, a real nice woman, but very, very straight and to the point. And one day I was in there and romancing her and had been trying real hard, knowing full well that if I could get her business, really it was like an income stream coming in. And one day I walked by her office. I'll never forget. It was so traumatic later. Now, obviously, this isn't going to end up well. But she came by and she said, well, by the way, I have this VA loan, and this person is in the active service in Japan, and I'm told that I have to get a statement that on the day of settlement, that from his commanding officer, that he's alive. And my quick take on this, and the fatal error, was that this was the most preposterous thing that I ever heard in my life. And with a very straight face, looked at her and I said, "Well, that's a bunch of hooey," and never even heard of something like that. Well, as it turned out, literally, if you have someone that has a specific power of attorney, like a wife in settling on a house, you, at least at that time, not up to date how it works today, but literally you had to have a cable come in on the date of settlement stating that this soldier was alive. And after I had totally blotched that up, she was cordial, but from that point on, she never, ever gave me a loan. And it was like, and later on I ran into her about, I guess 10 years after I was stopped originating, and we had a good laugh over it, but she very much acknowledged that, you blew it.
Yeah.
That was the price you paid. Anyway, enough of the personal story. Back to you.
That does happen.
When you were starting, and I do think that's great advice. Did you have any mentors or anybody in your office that helped you out? And what specifically did you do for training? And even the lack of training, I think, has value in this discussion.
Yeah, as I highlighted on earlier, there really wasn't a formal training piece. When you're hired in a refi wave, the boss wants numbers, as we all know. So they want you to, really look at your forms, study your forms, but more importantly, go out and get the business. So there wasn't a period of time where I would come in the morning at 9 o'clock, per se, and go to a formal training class. During those times, everyone was extremely busy writing mortgages, and there wasn't a training class that was set up for new LOs coming into the business. And I think, at least what I've seen within the last 2 years, that has changed, and I think I'll highlight on that or talk a little bit more about that.
I wish you would. We could get right into it now and maybe step up a little bit.
And last year, actually, we started...
By the way,
yes.
I do need to tell you on tape, we're not looking for anything that's proprietary to your company.
Correct.
That they would consider a trade secret. I know that's common sense, but I just want to say it on tape.
Okay. I can give my personal experiences, and I don't think anyone would have a problem.
Sure. No, not at all.
They're all very positive, and again, I would, if I had to emulate a process that's in place, I'd probably emulate ours.
Yeah, well, I know your company is a very, very good company.
Exactly.
For sure.
Within the last 2 years, obviously, the business and the training processes have changed dramatically, I should say. So when new LOs come in, they fall under a senior loan officer or what we call a team leader, which I would fall into that position. So I would take them under my wing, he or she, and give them their training, which we do. And the way it works out is either 2 days or 3 days a week, we spend 45 minutes to an hour, or we try to get together at least once during the day, depending on our schedules, and they are conflicting. But we do sit down and we go through different programs. We try to cover a different program or answer any questions that the loan officer may have about questions they've fielded through the week, which they did not have the answers to. And I encourage the LOs to write those questions down so we can address those, so they do have the answers the next time the phone rings. As we all know, knowledge is king. So that is very important to me. I think in many ways, several loans are lost daily within any company because of our lack of product knowledge. I think product knowledge is the king to making a loan work, and it's important that these LOs are trained up front correctly, not making the mistakes even I made when I started by asking the wrong questions when we field a phone call coming in to our branch, such as giving interest rate away right away. We need to ask the right questions. We need to search. We need to find out why they're calling. We know they have a mortgage question. We know that they have a need. We need to find out what that need is. So again, asking questions, developing a relationship, if you will, over the phone within a 5-minute period or a 10-minute period, because that's how you're going to sell yourself. Those 2 minutes or 3 minutes or 4 minutes or 5 minutes are really going to make the difference whether you get the loan or the next LO is going to get the loan. And it's very important that we understand that. So again, my thought process when I meet someone and when I train someone is to make sure that they're asking those questions right up front. we can always get the product knowledge, but we have to remember not to give our aces away right away. We need to hold on to those aces in our hand to make sure that when we're talking to that applicant, we know that they're looking for a refinance, or we know when we quote an interest rate, it's for an owner-occupied property, not a non-owner-occupied property. So the training has definitely evolved and changed, and I can say quite honestly, our bank and our institution has grown leaps and bounds, and I'm very proud of that.
Let me ask you something. In your business today, first off, it's a general question I ask everybody. What is your general market area? And then after that, I'd like for you to cover, specifically break down the types of loans that you do, kind of leaving aside refis. And by that I mean realtors, purchase money, seconds, VA, FHA. My
percentage of breakdown, I guess, of business, if that's the question, how I bring that into the bank, I would say anywhere between 50 to 55% hopefully would be realtor business. From my last look at my numbers, that's right about that, right on that number. My other piece of business comes from, obviously, direct, a small piece, but it is a piece, and I consider 5 to 7% a small piece because I've been in the business now for 8 years. So again, I had a phone call yesterday from a referral that I did a mortgage for a person, and they had recommended me highly, so I'm meeting that individual today. So that does happen on a regular basis.
Sure.
I mean, I'm fortunate. But I think I'm fortunate. I don't consider that being fortunate. I think that's hard work, and those are the payoffs of hard work.
Exactly.
And making sure you're doing your job correctly. So that's the small piece. Also, attorneys. Attorneys are a very, very, I think, vital piece of my business because in Buffalo, New York, it's a small community. There's 3 to 4, maybe 5 big firms that close for the bank, and I'm very well tied into those firms because of the referral network that I have set up.
How did you? I want to zero in on that like a laser, that aspect of it. One of the reasons is we talk to a lot of people that do realtor business, and that's something that will be well covered in the interviews. But lawyers, these small niches that have value. I think this is a value to the people listening, especially the new loan officers that are kind of wondering where they're going to get their business. So would you cover that, how you got into attorneys and what you do?
The first thing I did is I looked at, in my area, who closed, most of my loans, obviously. And I broke it down by the size of the firm. Now, that's not the way to attack it for everyone. I know that, but I went after the big players right away, immediately. What I did at that point in time is I set up a breakfast meeting with all the senior partners. There was really no formal introduction before that. They knew HSBC was sending them business, but they really didn't know where it was coming from. So it's very important that you get your name and your face in front of these individuals. They know you're helping their firm's bottom line. They would love to meet you. They had indicated that several times throughout the breakfast meeting that they were so happy and grateful that I stopped in and I set that meeting up. And then indicating to them or advising them on referral business, asking for the business, the bottom line. You need to ask for the business. And I went in there, and I knew my game plan, and I went in when I introduced myself. They were very happy to see me, but at the same token, I went directly right into it. And
were you new in the business?
Exactly. This is where I am in my business, and at that time, I asked for an internal memo to be distributed throughout the firm, indicating that if any refinance questions or any purchasing needs were needed in the firm, that they should contact me. So at that point in time, when I left that day, there was an internal memo throughout the whole entire firm, with my name and my number and our logo, stating, please contact me. Ever since then, I haven't looked back with that firm. That relationship has grown leaps and bounds. I must do 20 to 30 deals a year from that particular firm. And I attacked it the same way with the next 2 firms that I met with. And again, they were very happy to see me. That is easy to do, in my opinion, because they are getting the business. They know where the business is coming from. You're going in to increase your business, and it's very easy to ask. You actually, in some way, you have a relationship. You need to expound on that relationship and expand that relationship, if you will, and go forward with it. I think the biggest misunderstanding in this business is it's going to come through the door. Well, it's not going to come through the door if you don't work your relationships. And you need to stay on top of your relationships, because there is another Steve Mendelson out there that is going to do what I did. And if I'm not taking care of my people, someone else will.
He'd love to have your business, and he'd be happy to take it away from you.
So that's the one thing I learned. The other piece of my business is through CPAs, any accounting firms. I had a meeting with a rather large firm a couple weeks ago that I met with, and they were very happy to see me, especially in tax season. Anything that I could do to help them with their clients, such as maybe cash out refinances or anything in that area, new purchase money. Meeting with them and taking up 15, 20, even a half hour of their time is well worth it. I can, again, tell you that I received 3 to 4 deals from that firm since my meeting a couple weeks ago.
Could I interject here with a comment, and it's an observation, and my observation is that a comment that you made, that they are happy to see you. And that kind of blows my mind a little bit, because it indicates to me that if they're happy to see you, it means that they certainly haven't had contact with a lot of loan officers calling on them. And because if they had someone like you and were doing business with someone like you, they wouldn't particularly be happy to see you because they already had somebody.
Yeah, in a lot of cases, I found out where you would think that they would have a person to send business to.
Exactly.
And you go in the front door thinking, well, I'm going to be another face in front of them today. But you can't go in with that mindset. Your attitude has to be, I can give you better service. I can give you a referral network. It's what I can give you too as well. So it's important that you keep focused on that. It's not to say they didn't have another person maybe that they were referring business to, but being with a large lender, having a relationship with this particular firm, I was able to step in the front door and develop a relationship that I think is going to work and grow within the next 2 to 3 years. And I say that because not everyone works with a big lender. There's several different outlets in this business, and I realize that. But whether you're working with a mom-and-pops organization or you're working with a big lender, you still need to have the mindset of going in and saying, I can deliver. And it's important that you convey that. I think the only way you're going to be able to show them that you can deliver is to get a loan. And once you get a loan, it's important that you make sure you walk that loan, and take care of that loan, and whatever you need to do to get that loan to the closing table. And that's what I've been able to deliver on. My promises, my word is my word, and I think that's very important out there in the field. That's really all you have, and you need to convey that, and you need an opportunity, and I stressed that to them. I said, the only way you're going to know is to try me. And I've been fortunate enough with my credentials where I've had individuals say, geez, it was the best move we've ever made. I'm so glad we're using HSBC at the time, and it just snowballs. It's so amazing when you guarantee something to someone and you actually do it and you follow through with it. Believe me, your best way of marketing yourself is through other people, and that's what I found, and that's what I've been doing.
What about, I think there's a corollary in dealing with these attorneys and with CPAs, and that is, what value added do you bring to the equation? Obviously, having a good company is there, but what I'm talking about, things like availability, are you available all the time? What kind of technology do you use?
The technology, right now I can say is obviously, anyone that's in the mortgage business has changed drastically, and the fortunate thing is our bank has the commitment to stay in this business, and obviously if you're going to stay in this business, you have to have the right technology. So now with the new technology that is in place, Loan Prospector and so forth, the Internet, using those tools to your advantage, which I do very well, I believe, is something that I make sure that I convey that message to our vendors. And again, these individuals are our vendors. So what I do is I try to get together with presentations to let them know where the business is, keeping them involved as much as I can, giving presentations regarding LP on the net, and walking them through an actual 1003 and showing how fast an approval can be turned around and what the docs look like and so forth. So those things I've been doing, and and that's important that you do those things to make sure that everyone that you do business with is aware of the business and the changes in the business and how it's going to affect your pocketbook. So those are the things I think today that I've been focusing on more so than anything else is the change in the business and getting that word out.
Do you take a hand 1003?
I still, believe it or not, I'm from the old school still. I don't mind taking a 1003 by hand.
I'm not saying it's bad.
No, I don't. I actually like it. I don't mind it. I have my own system set up in place, and then if I have to key it in when I get back into the office, that's something that I'll do. Or I can take my laptop with me. I'd like to talk a little bit before we ever get into an application. It's the biggest purchase in someone's life. I don't go in there with a laptop for a reason at this point in time. It's new. I don't want to come in and send the wrong signal to someone. Mm-hmm. So traditionally, I'm fine with the way I take an app. I enjoy it that way. I can tell you honestly, before I ever pick up my pen, it's probably anywhere between 15 to 20 minutes after I get to know the individual a little bit more. Again, asking the right questions, making them feel comfortable with you. It's a lot easier to get information from a person when they feel comfortable with you versus opening up your briefcase and throwing a 1003 on a desk and name, social security number, and it doesn't work for me. I have a system in place, and I think, again, that's why I'm as successful as I am in this business.
Mm-hmm. What about, this leads me into pricing, mm-hmm. And just throw that out generically, pricing, and how do you feel about pricing and points and being competitive, and what's your take?
My thought on that is, when I was with the bank and we didn't have a competitive price, I was still selling mortgages. So that told me something right there. I was selling anywhere between a quarter to 3/8 out of the market at the time.
Percentage or point?
Percentage.
That's pretty high.
When we were in business. Mm-hmm. One, I could attribute that to because I was with a big bank in a relationship that the individual had with the bank, or two, a combination of the relationship and me actually making my presentation to the individual and letting them know what the process was going to be and walking them through A to Z. I feel that it was a combination of issues, and I can also tell you when we didn't have a relationship, when that individual didn't have a relationship with the bank, or couple, if you will, I was still selling that mortgage to that individual. And I knew at the time that we were a quarter to 3/8 out of the rate. The individual knew that we were 3/8 to a quarter out of the market, but I was still selling a mortgage. I've never let price be the determining factor of my success. And I think that's very important that new LOs in the business realize that your price is not going to make or break your deal. You are going to make or break your deal. They are buying the mortgage through you. They are not buying it through anyone else. So you have to sell yourself. And I do that on a daily basis. I can tell you, I'm meeting with an applicant today, and I will guarantee you that I do not have the best price in town. But I also guarantee you I will get this mortgage today based upon what I can offer this applicant. And that's very important that new LOs realize that. They cannot moan about price day in and day out. That is not going to make you a better LO. Mm-hmm. That's my thought on price.
I'm glad to hear you say you're stating what's obvious to those of us that have been in the business for a long period of time. But I think, and I'm glad to hear you say it, because when you are new and you're a new loan officer, entering the business, you can become so fixated on pricing, mm-hmm. Literally can drive your mind nuts.
Correct.
Two other areas I'd like to talk about. Mm-hmm. The first one is actually related to pricing to some degree, and I'll start it by tossing out a comment that when I used to train loan officers many years ago, and that is the concept of rejection. That we're in a rejection business, and you need to be able to handle rejection and not take it personally. And I wonder if maybe you could pick up on that and talk about it a little bit.
It's a very good point. Rejection is part of this business, plain and simple. It's going to happen. You're not going to get every deal. Someone that thinks that they are, well, this business may not be for you.
Do you internalize it?
I actually embrace it. And it's funny that you say that, but I think that's what my goals are set on, finding out why I didn't get the deal. That motivates me. Some of my bigger offices, when I first started in this business, I can remember walking up to the door, so scared and so intimidated I'd drop off a rate sheet and run, or I was greeted at the door by the broker manager, and he would ask me at that point in time to go start my car and leave.
Sure.
So I remember those days, but I was persistent. You need to be persistent. You need to be aggressive. You need to continue to call on that office. It takes one person in that office, and that's what you have to remember. It's like a wildfire. It will burn. If you get one person in that office, you need to realize that that's all you need. And if you take an application and you get a mortgage commitment, and you walk that commitment over to that individual, and you hand it to them in front of other real estate agents, they will talk. Anyone knows that's been in a real estate office, you do a lot of talking. Real estate agents, God bless them, I love them, they're a big part of my business, they love to talk. And hopefully they're talking about me. That's what I need. You need to realize that not everyone's going to like you. You have to realize that this business is a tough business. It's a very, very aggressive style of business. You have to bring your A game to the table every day you wake up and get out of bed, because you're going to get a phone call or you're going to meet someone, and you have to look sharp. And when you're calling on these offices and you walk out thinking, well, I didn't get a deal, you cannot get depressed. You have to assert yourself and say, I'm going to go back the next day. And that's what I did. I actually went back to one office 5 days in a row until I got through the front door, until I was able to actually sit down and tell a real estate agent about a terrific program I know that they would love, and someone was able to listen to me, and it worked. I got 4 or 5 calls that evening about the program. They were all very, very interested, and it turned into 3 or 4 apps. From then on, it takes off. Again, you have to work the relationship, you have to be persistent, but more importantly, you do not give up. You do not give up. I can remember going into offices that I couldn't get into the front door, but I could get into the parking lot. So I created flyers, and I put them on their window.
Great. I like that.
You have to be creative in this business. You have to be one up on your competition.
How about some other creative things with realtors? For example, how did you get around that front desk, which even when I was in the business was just a huge obstacle. As the business grew when I was young and getting a little bit older, the people the people entering the business doubled and tripled, and in some of the offices, I lived in a reasonably wealthy area. They had so many loan officers going after these loans is that, one would walk in, walk out, another one walk behind him. It was every day. They probably got hit by 15 different loan officers.
Anyone that's new and into the business, I'll give them a secret right now. I'll give them a nice little secret. What you want to do is be best friends with that secretary. The first person you see, she has to be a friend of yours. And that's the first person that I worked with, and the first person that I said hi to, and the first person that I was able to give a cold pop to or a cup of coffee in the morning, something as simple as that. You have to become friends with that secretary. She's the eyes, ears of the operation. She sees all, she knows all, and she can be instrumental in the developing of your relationship in that office. So, again, anyone that's new, that's coming into the business, you need to reach out. You need to greet that person. You need to be friendly with that person. She can make your life very easy. She can make your life very miserable. So that was my first plan of attack, is when I walked into an office, to greet that individual. Hi, how are you? With a big smile. I have whatever I brought in for her, whether it was some type of little trinket or a cup of coffee. I developed that relationship. By 6 months going into that relationship, she was referring business to me through her real estate agents. She was making recommendations. And that's so important, because if you can't get past the front door, you're never going to make it. You're never going to make it. Once you get through that front door, the sky's the limit. And
one of the tricks that I used to use, and this is your speech, not mine, but just as a prompt, is that when I used to call a realtor's office and there were huge obstacles at that front door, I would sometimes from the managers themselves that would just, the play would be, I don't want you bothering my agents. But one of the things I would do is I would go before 8:30 and go after 6 when the manager left, and sometimes on Saturdays or Sundays, where you pretty much had free entree and, could always get people that were staying later coming in early.
And
you ever do something like that?
I did something similar to that, but my thought process changed again because what I thought about was, wait a minute, let's stop and think about this. I have to go in at a certain hour and leave at a certain hour. Why? Because either I'm afraid to meet with him or I'm intimidated by him being there. You have to get over that fear. You have to, again, once you get into the office, you have to let them know, wait a minute, everyone's profiting here. The office is more profitable because I'm here. And you have to let them know that. You have to let them know those loans that you got through that were tough or that were borderline that you made, or even the easy loans, the loans that we received a commitment in a day that closed on time. You have to keep them in the loop. It's important that you do that. I think that they'll respect you more. I think that once that intimidation factor is gone, you'll be at better ease with yourself, and you'll be more easily accessible to the office.
Did you feel, I like that word, did you feel intimidated when you were first in the business? Because I think a lot of the new loan officers out there, even some of the ones that have been in business a while, they really do feel intimidated because
it is intimidated. And if an LO tells you that he's not, well, I haven't met one yet in 8 years. I know I was intimidated. You have to go out and ask for the business, and you have to sell yourself and to individuals you don't know, and you have to get through some barriers. It is an intimidation factor that's involved. It can be overcome. I know it's part of the process, but it is there. It was there for me. But again, I use that intimidation factor as a fire in my belly to motivate me. I'm a very motivated individual. I'm a very goal-oriented individual. I think in this business you have to have those two characteristics. Without those, it's going to be difficult to make it. So I feel very compelled to tell any new LOs that are going to listen to this, you're going to have that intimidation. You're going to have that emotion. It's going to be there. You need to deal with it. You need to turn it around. You need to take that intimidation and make it work for you, and that's what I've done.
What about, did you ever do any training as part of your core philosophy? For example, training new realtors or...
Correct. Yes, I have.
Not everybody can teach. That's why I bring that up.
Yeah, it's important that you try to train your realtors or, again, any vendors or anyone that's a part of your business. Again, going back to what I said earlier about the technology in this business training, the last 2 months, I know several LOs, including myself, have been in the field doing presentations about the LP on the net and how does that exactly work and how is that going to change our business. And we've done case studies, if you will, live applications that sometimes, if you will. I know I just did one, a live application. Those things we need to do. That training is vital. And when the training's done, the most common feedback I get was, it was great. It's great to know where the business is, or I can relay this information now to my purchaser or my seller. Again, knowledge is king, so they walked out of there learning something that day. It was something that I could give back to them. It wasn't me standing in front of them telling them how great I am or what I can do for them. It was a new approach, and the approach was giving them some knowledge about the business, letting them know where the business is going, and more importantly, for us, who has the technology? We have it. We have it in place. We are using it. It's now, it's today, let's take advantage of it.
Do you use any, with that in mind, do you use any particular software for qualifying, pre-qualifying, and what about the difference between pre-qualifying and are you getting actual approvals before they buy homes?
Yeah, most commonly used right now is pre-approval process. We run those on the LP or DU.
Mm-hmm.
So again, if I'm meeting with someone today, for example, they're going to look for a house over the weekend, we'll give them a pre-approval today, as long as they have the correct documentation.
Just subject to an appraisal then?
Correct. Subject to an appraisal, always, obviously, on the pre-approval piece. But it's something we used to be able to turn out in 2 or 3 days. Now we're turning it out while they have a cup of coffee. So again, that whole experience is more enjoyable. It's quicker turnaround, and I can get them into the field quicker to buy a house. So the pre-approval process and the pre-qualifying process, if you will, is very much a part of my business. It always will be a part of my business. We need to have it that way. Without that piece there, that's how mistakes happen.
When I was younger, we didn't have the DU process, obviously, and in those days, I won't give you the term on the phone. We used to call them BS letters, where literally you'd go in and just do a quick ratio thing and give them a pre-approval letter, but it was obviously always subject to an appraisal and a satisfactory credit report. So it was like the biggest hole in the world to jump through. It really didn't mean too much. But now with DU, you literally can give someone a legitimate approval.
Oh, it's terrific. I mean, I remember those BS letters, actually. We'd have applicants come in and they'd sit down, we'd do their ratios, and we mentioned that word ratios. It's the business has definitely evolved and changed. I remember when ratios were the biggest concern.
Yeah, they ruled.
Yeah, it ruled. When we looked at a file, now it's so credit score driven. That's the business at this point in time, and I truly love it. I embrace that because the ratios. If I have a high back on ratio, I know with an 80 LTV and credit scores of 750, I'm going to be able to get that loan through now. So again, that's the information that we need to let the real estate agents know about, because several real estate agents that I work with are pre-qualifying, but they're pre-qualifying on the old school method, and that no longer applies. And we have to get out there and let them know that, because we don't want to let them lose deals. If they lose a deal, we lose a deal. And it's very important that we convey this information effectively.
Well, a couple of points on that. One is that with the realtors, once again, when I was training, I used to try and really put a lot of emphasis on the fact for loan officers that when you lose a deal, you lose in $200, $300, $500, whatever it is. But when a realtor loses that same deal, they're losing $2,000 or $3,000.
Correct.
And there's a certain paranoia. May not be the right or even the appropriate word, but it's the word that comes to mind. There's a paranoia that takes over with realtors, and that's one of the reasons the business can be so difficult. For example, if you have a real young face or they haven't seen you around, the reason for that is not that they don't like you per se. It's the fact that they're scared to death that they're going to give you one of their deals that they have $3,000 coming in on that's going to pay their rent and car payment, and you're going to screw that deal up. And so they naturally gravitate towards people who are professional, who have been around a while, that they feel comfortable with. But you have to earn your spurs to get to that point.
Got it.
I've known people that young kids, I call them young kids, but in the business that literally would grow mustaches and beards just so they could look a little bit older. Yeah. It's a common thing.
I haven't done that yet, but I can tell you the old cliche and the old saying, as we all know, is you're as good as your last deal.
Isn't that the
will hold true in this business, and you have to remember that when you're meeting a real estate agent. I can't do every deal, and I don't claim I can, but I let that individual know why I can't do that deal, and I'm not saying there's someone out there that can't do it or can do it. I'm just telling you what I can do, and I'm very upfront about that. I will not make promises I cannot deliver on, and I go back to that statement I made earlier in this interview. It's very important that LOs realize that. You almost will sell your soul for a deal when you first get into this business. You feel like you're doing it anyway. You promise the moon, and yeah, I can do this, yeah, I can do that, but you're gonna, believe me, take it from a seasoned veteran. You're gonna get burned. It's gonna come back to bite you. Saying no once in a while will not do anything to you. It'll actually, I think, help your reputation to let people know where you stand, and it'll make you grow as an individual as well.
You are into an area, though, that actually was my second point, and that is, yes, now that we're into credit scoring and DU and stuff like that, what happens and how do you handle people that start to show up in the 600s, whether it's 610 or 670, or what do you do when you start to get some
credit? First of all, doesn't mean we cannot necessarily do the deal. Obviously, if it's conventional scoring that we're looking for, it's going to obviously affect us placing that loan with our our investor, Fannie Mae or Freddie Mac, whatever that may be.
But you don't consider it a goner if someone shows up at 650 or 640.
And that's something that I think all LOs have to realize in this business, that, take a look at the credit. I think the first thing new LOs do is they look at the credit score, 610 or 598. Can't do it, see you later, Mr. Jones. You have to sit back, you have to ask the right questions again. You have to take that credit report, sit down with the applicant or applicants, and ask them, we had some credit issues here, let's find out, let's dig a little bit. You'd be surprised what you'll find out once you dig. Again, it doesn't necessarily mean we cannot do the loan, we just have to ask some questions to find out where we can put the loan. That's been my thought process ever since. When I meet with someone, my goal and my objective is to put this person or couple into a home, and I will do my best to do that. If I cannot do that, I will indicate why I cannot do that, obviously, but I will also give them a plan of action, how to buy a house, what we need to do to get you back into my office to make this happen for you. You have to be upbeat in this business. You have to leave on a positive note. If they leave on a negative note, those people may not be able to buy that day, but they're going to buy, and you're going to want those people back. So you have to remember to leave, when they leave that interview room, they are upbeat. They have some work to do, but it can be done. They will get it done, and you will see them down the road. And that's very, very important.
Will you actually
tell you how many applicants that, unfortunately I wasn't able to help up front, but a year, 6 months, or even a year and a half down the road, they had my card. They called me. And it's very important that new LOs realize that. Again,
will you actually take a credit report and go over it with them? Or
I have. Yes, I do. You need to. If it's a credit-related issue, how are they going to resolve it if you don't sit down with them and do that? You need to let them know.
I also,
their credit report.
I also think with credit reports today is, you read the papers too, you know that a lot of companies that are not reporting when people are paying their bills on time, especially if they have a higher interest rate, because they don't want to get snaked by another company coming in offering a lower one.
It's very true.
Now it's spreading to where even the companies that have market rates, they're not reporting too, and I think it's the FTC has come out and tried to put the kibosh on that.
That's a real good point. You bring up that piece, but there's another piece that's also tied with that is incorrect reporting.
Right.
And that's something that's very common in our business. And again, that's the reason why I sit down with my applicants with the credit report in hand to ask them, is this your Bonton card or is this your MasterCard that's delinquent? In some cases, it's not their card. They're either a junior or there's been a mix-up, and those issues can be resolved. But we need to sit down and ask those questions. Again, it's important that we do that. So I feel when anyone meets with an applicant or an individual applying for a mortgage or looking to get pre-qualified, because, again, we're in a credit scoring business, I always encourage that LO, I will encourage that LO to pull a credit report if they have the accessibility to do that in their office and sit down with the applicants and go through that credit report, because that is so, so important. I think if we had to prioritize loan approval today, it would be credit, assets, and job stability, probably in that order, when we write a loan. So that's what we need to look at.
Yeah, and I think with the credit reports today, I think it's important. Obviously, if someone has a good score, that we're not talking about them. But you're right, there is that middle ground, and there are deals that are really there where there's errors on a credit report, or in the case of some of the Chinese and Koreans and some of the ethnics, they culturally put their money in mattresses or
lack of credit,
and exactly, and they don't have credit yet they're very credit worthy.
And you have to ask those questions again. That's where alternative credit comes into play. And it's very important. That is a form of credit if someone's paying their rent or their utility bills. We need to get those letters. We need to search. And again, sometimes, it happens to me. It'll happen to everyone. You'll get an applicant that has a lot of money in the bank but does not have any established credit. Well, nothing on paper, but if we ask the right questions, you'd be surprised. They do have established credit. It's just alternative established credit. And we need to pursue those areas and ask those questions, and those deals can be made. It's important. And then we can counsel them on how to establish credit. And I think that's a very, very important piece of our job as counselors. We have to keep in mind that the average first-time home buyer is in their home for 7 to 10 years. They're going to buy again, and they're going to remember who took care of them the first time. I know I do. And
I find that interesting because I think for the listeners out there, especially the new listeners, I think your point, if I can delve into this a bit, is that this is a game that's a long-term game.
Correct.
And when you are talking about some of the things you've been talking about the last 5 or 10 minutes about fixing credit reports and counseling people, it's something that you have to do for the long haul because that's how you build your business. It's just not calling on realtors or calling on CPAs. It's working with people for the long haul and where they're going to call you back or refer somebody else to you that is creditworthy.
That's very true. You have to remember when you have that person in front of you that you may have that person in front of you again maybe 2, 3, 4, 5 more times if you stay in this business. And that's a very, very important part of your business. And I think a lot of misconceptions in this business and a mistake that I even made when I started is when we're meeting with that applicant, we're thinking, well, this is a one-time deal. It's not. We have to remember that. Statistically proven, it is not. And the other thing we need to do is ask for the business, why you have this applicant in front of you. I always end my interviews and my loan applications with a simple question, with a simple favor or an asked question. Geez, if you know of anyone that's looking for a mortgage or that has mortgage questions, please feel free to refer them to me.
Mm-hmm.
It's very important that you do that. And that has turned into so many deals for me, I can't tell you.
It's funny. I think even the old pros that are out there can find value in that comment. It's amazing. It's funny. I used to go to all the Zig Ziglar talks, whenever he came in town. I still do, as a matter of fact. And it's not the value is, it's not that you don't know exactly what he's going to talk about. It's the fact that he's reinforcing things that you know and that have kind of dropped by the wayside. And I think asking for the business, that's way up there. And asking for referrals, it's just things that sometimes you just even as an old timer, it just kind of slacks off and you kind of forget it.
It's simple things sometimes we take for granted. You're having a terrific month, and you met with 22 people that month, but out of the 22, who did you ask for business from? Simple things. Sometimes you have to go back to, what made you, a good LO, and those are the things that made me a good LO. And I think sometimes we all lose sight of those things, but it's important that when you reflect at the end of the day, what did I do to increase my business? Or I always ask that question to myself, or at least I try to, at the end of the week or the end of the day, whenever I have some time to reflect. And if I see myself, geez, I would have done this a year ago, but I'm not doing it right now. And I try to get back to those rules.
Mm-hmm.
And that's very important that you set goals and you have rules and you follow those and you try to develop and create more business for yourself. And these are just some simple hints and some simple tips that I see in my office with successful loan officers. And again, what has made me a successful loan officer?
Exactly.
Is that I'm out try to get into the office 2-3 hours a day. The office is not where your business is at. We have to remember that. Anyone that's going to get into this business, if you think you're going to come in at 8:30 and leave at 5, you may want to look at a different career path.
Or weekends even.
Or weekends even, correct. This page here, I think, is actually attached to my hip sometimes. It's part of my anatomy. But keep in mind that you have to set your schedule so you're out in the field in front of people. And that's so important. Out of sight, out of mind. You have to be in front of people, whether it's just to say hi or just to poke your head in. I can't tell you how many deals I've gotten because I was in the right place at the right time. And anyone knows that has been in this business knows that is so true. You walk into a real estate office at the right time. There just happens to be a contract in front of you, and the applicants are in an interview room and they're looking for some questions. Or there's some answers to their questions, I should say.
Mm-hmm. And
that's very, very important that you set a schedule and you try to hold to it. So again, time management is very, very important. And you need to find out where you need to be, and you need to set a course of action for yourself.
Kind of related to that, and I think this will be our last topic today before we sign off, and that is, how about commenting on controlling the process from start to finish, not only the applicant but the paperwork.
Funny that you mentioned that, because my boss and senior management always talk about controlling the deal. Controlling the deal is so important. And from the minute you meet with these individuals, from when you sit down, you have to have that presence in the room. They have to feel it, and you know it, but they have to feel it, and they have to realize that you're taking control of the deal. And the new LOs that get into this business, believe me, you will get beat up, and you'll learn. It's a learning process. Whether they want you to waive an application fee or a doc prep fee, or they want to close the next day. Things, again, that you can't deliver on, don't promise. It's important that you let them know what you can deliver, how you're going to deliver it, and what to expect throughout the mortgage application. And it's very important that you set that tone early. Again, control of a deal is very, very important. Anyone that's been in this business, again, knows profit margins are very, very slim. If you have income fees on a good faith estimate, whether they're a loan application fee or a commitment fee, those fees are needed. Waiving income fees is not the way to stay in this business. It's not going to be profitable for you or your company, and if you continue to do it, obviously you'll probably be out of a job. So you need to realize that up front, that those fees are on there for a reason. You need to explain to them what those fees are for, so they have a comfort zone with those fees. Working, I'm sure, in a competitive environment, your fees are going to be reasonable. And there's going to be certain cases where you're going to have to do certain things. But again, case by case, the rule is your application, your good faith, the loan process itself, those things are all driven by you. You should take that person's hand and walk them through the process. I think if you show that you're stern with numbers and that you're firm in your tone, they're going to feel confidence in you, they're going to want to deal with you, and they're willing to pay maybe an extra $100 because they believe in you to get that mortgage approved and closed. And that's very, very important to know.
I think I could spend an hour just on the importance of voice tone itself, but I think we'll save it for another time. Look, I know you got to run to a nap, and you're actually late, and I appreciate it. So this about wraps it up. I did want to say that your geographic area, we didn't cover that up front, is New York. Would you just kind of do a quick where your market area is and what the average loan amount is?
Oh, boy.
And then we're going to end it pretty quick here, because I know you're on the run.
I love talking about that, because I work probably 3 times as harder than maybe some of my counterparts downstate.
Well, it actually is my point.
I know it is. My area is Buffalo, New York, Buffalo/Rochester, because I'm a Rochester native as well, so I have a kind of 2 areas to deal with. My areas, they would vary. I'm kind of the traveling circus, if you will. I'm a little bit everywhere. Amherst, Williamsville, West Seneca, and then going into the Rochester area, and then also into some CRA areas as well. My average loan amount would probably be around $75,000.
Wow.
As scary as that sounds. My units last year, I think, were in the 330, 315 range. So we write on units here. A jumbo loan to me is about $120,000. Keep that in mind.
That's poor up here.
Exactly. I've never had the privilege to write a lot of jumbo mortgages. And again, to the area that we live in, is conducive to a conforming small fixed-rate market for the most part. There are, actually, I shouldn't even say conforming for the most part. We have done conventional as well as Gubby loans, but Gubby seem to be coming on very strong lately, and I want to throw that in because I'm seeing more and more VA mortgages and FHA mortgages as first-time home buyers start to creep out with these interest rates rising, the ones that were on the fence anyway. We seem to be seeing more activity in the government area, and I wanted to add that.
Okay. Why don't we kind of end on that point? I wanted to thank you so much for your time. The points you've made have value. Not every interview is a good interview. Most of those won't even show up, but this one really does have value. Your points are very on the mark, and I wanted to thank you for it.